Sup chat. So today I'm going to be talking about how to mark up your charts and then talk about how to get entries, how I get my entries and how I mark up my chart. I'm going to be using NASDAQ and I might also use gold. But yes, that's pretty much what we're talking about. This is a video request from the Telegram. If you're not in the Telegram, please do join or join the Discord. But getting right in the video, how do I mark up my chart? Now, when you're marking up your chart, you kind of want to get a full picture of what is going on in the market because it's from understanding what is happening in the market that you can be able to find a trade that you're gonna be in, right? So the first thing you need to understand is that when you're marking up your charts, you're not marking up your chart right off to get an entry. No, you're marking up your chart to understand what is going on in the market. The better you mark up your charts, the better you're gonna see things. And if you don't mark up your chart correctly, then most likely what you're going to see is going to change. So marking up your chart is not the biggest skill in trading, but it's also very crucial because it is what is going to decide what you will see and what you're not gonna see. So first of all, when you mark up your chart, I would say you wanna use the 1 hour time frame or the 4 hour time frame, depending on you, or I would say depending on the one that seems clear. For me, a lot of times I like to use the 1 hour. But sometimes also I just go to the 4 hours to also understand what's going on there to help me make better decisions. So here on the Nasdaq, I also want to point out that I don't really go so far back when marking up my chart. When I go back, it's just to understand the whole trend. But like I focus more on what is happening in the market, and I just use mostly what happened within the last 3 to 5 sessions to kind of make a decisions on what I'm doing on the trade. So getting into the video, marking up your charts, I will start um I will start from the 4 hour time frame because it's good too. Now if you go to the 4 hour time frame, what you're gonna notice right off is price is an uptrend, and like you wanna stay with the trend no matter what, right? So price is in an uptrend, and if you see right here, I'm gonna mark out this zone because if you look at this zone, you see right here how price made that indication above that zone. So I'm gonna go full screen. So you see how price made that indication above that zone, showing us that hey, above this level price is trying to go up, right? So that's yes, the indication from price telling us what it wants to do. This is the correction. From what I'm seeing here already, this is a correction because after price made this indication, you're building higher highs and higher lows and higher highs and higher lows and higher highs, and then price started making lower lows and lower highs and lower lows and lower highs and lower lows. So this is the indication and this is the correction, and this seems to be like price is starting to continue to push back up. So this is what I'll mark up on on the 4 hour time frame. Now I'll go to the 1 hour time frame to kind of also understand what is going on in this time frame. Now coming to the 1 hour time frame, we see from what price is doing, from what we've seen on the 4 hour time frame, we're looking for buys because overall trend is bullish and price seems to be in the continuation phase of the ICC. So here on the 1 hour time frame, what I'm going to do then is that I'm going to mark up my chart to see how best I can be able to get in on the buys, right? So um what you need to understand here is I'm gonna type it this one down so it's clear. So you have here a lower high, you have here a lower high, and then you have a lower high here, and then you have another lower high right here, right? And then yeah, that's pretty much it. So you have a lower high here, lower low, lower high, lower low. So um we see how price comes into the zone, tries to break back down but fails, and it's looking like price is starting to pick up that push, pick up the momentum to start pushing up to this zone, right? But we know that the only zone where the buyers becomes very valid is above this level here, because this was the last level where the lower high was made from. So when you mark out this level, is what you're gonna see, right? So this is what you're gonna see. If you mark out this level, you see that above this level is where you have a confirmation that buyers are now in the market and they're ready to push price higher. Because why do I use this level? I use this level because this was the lower high that made this low. So for price, so far price is still respecting structures. Lower high, lower low, lower high, lower low, lower high, lower low. So price can obviously inside the zone decide to start going down all of a sudden. That wouldn't be a surprise. Why? Because this is a lower high, and as long as this level is still being maintained, sellers can play. As long as this level is still being maintained, sellers can play. Now when you're marking up your chart trying to get an entry, you want to get in at a place or at a zone where you know that the chances of you getting the buy is very high, is really high. You don't want to get in at a zone where sellers have a chance, sellers have a good chance, because that's gonna bite. So you want to get in a zone where you know that your chances of the trade playing out for you is very high. So in this zone, in this particular situation, as long as this high is not taken out, chances of buys happening is not that high, even though the 4 hour time frame says it. But you have to acknowledge the fact that the 1 hour time frame all week has been making lower lows and lower highs and lower lows and lower highs. And if price, this can be the correction for price to keep pushing down. That's what you need to understand. So with that being said, um this is a level where I'm marking out, because at this zone is a zone where if price breaks above this zone, then I can start looking for that buys. Because the reason why I'm interested in buys is because, as we've seen from the 4 hour time frame, price is bullish, and also as we've seen, price has corrected itself, and it also seems that back above this level price is ready to keep pushing further. So since we've seen all these things, I'm now interested in looking for buys to join on the trend that price has already shown me it's on. The downtrend right here is just short term. It's a 1 hour downtrend. Can this short term downtrend turn to a long term downtrend? Of course it can, but before that is going to happen, we need this level here to be taken out to confirm that okay, this short term downtrend can potentially become a long term downtrend, right? So with that being said, I mark out this zone, and now that I've marked out this zone, all I'm going to do is to wait for price to come back above this zone for me to start looking for buys. Now, in terms of how do I get my entries, a lot of people think getting a good entry is getting into the trade on time so that you can get a sniper entry. But I've obviously explained to you why getting around this zone wasn't the best play. Yeah, maybe it's going well for you right now, but it wasn't necessarily the best play, because you have to acknowledge the fact that this high is still valid. So even if you get in here and price starts to move, you are obviously going to be looking out to see how price reacts to this zone. And if price doesn't break out of this zone, then maybe you're better off just closing your trade or going risk free. Like I was saying, in terms of how I get my entries, I do not start looking for entries until your price is above a level where I want to trade on, right? Until your price is above a level where I want to get in the trade, I don't really start looking for entries. Now, let's say, for example, that because first of all, the reason why I don't look for entries until price is above a level where I want to trade on. Reason why I don't look for entries is because the reason why you call that level a level where you want to trade on is because under that levels sellers have a play. Sellers can play. Sellers can be in the market, right? So if you get into a trade before that level, then you have to acknowledge the fact that you're getting into a trade, you're getting into a buy trade where sellers can also play. So that makes your trade a bit risky, and that puts you in that battle with sellers. But when you're taking your trade above the level where you know that buyers are going to take control above that level, that puts your trade in more advantage, because now you are together with the trend, and also you are together with a level where the buyers have more control, if that makes sense. So with that being said, you want to start looking for entries above this level. Now, inside this level, when you go to the 15 minutes time frame, right, and then you catch a buy, let's say you see, okay, price making higher high, higher low, and then let's say you get into a trade. Let me use these two. So you get into a trade, maybe as price takes out this level, starts making new highs and all that, you get into a trade here, and you have your stop loss here, and like you targeting I don't know, fucking targeting this high, or whatever the case may be, you're targeting higher, right? And then you watch how price takes you out and still starts going that direction. The reason why this is happening is because you got into the trade at a level where sellers can play. I don't know if this is making sense. So you want to get into a trade, even if you must go down to the lower time frame, like the 15 minutes time frame, to get an entry. You want to do that when price is at a level where buyers are going to be in complete control of price. That is where you have the most advantage. So with that being said, once price is above this zone, where obviously is the lower high that made this low, this is the swing high. When price breaks the swing high, what does that tell you? That tells you that trend is likely going to change, and price is likely going to keep pushing up. So if even if you now go down on the 15 minutes time frame to get an entry around this zone to keep pushing higher, at least you don't just have that entry in your favor, you also have the overall trend in your favor. You also have a zone where buyers are in complete control in your favor. So that's just one thing I kind of want you guys to understand. If you understand this, entry becomes easy. You don't get into an entry until your price is at a level where the buyers are in complete control, or at a level where the sellers are in complete control. You don't want to be in the trade at a level where both the buyers and the sellers can play, because that puts you in a tough spot. You can get your stop loss tapped out and the trade will still be playing out fine, right? So that's the key. What most some of you guys do is that you try to get into that trade so early, and you get obsessed with getting into the trade at the perfect time. You get so obsessed with that you kind of forget what the bigger picture says. And in this case, what the bigger picture says is that this is a lower high and this is a lower low. So for you to look for buys, you need to wait for price to break the lower high to then make a high high. That makes sense. So that's how I mark up my charts, and that's how I look for entries. There's no there's no particular way. I would say there's no miracle, or I would say there is no trick that I use to get into entries. It's just common sense. It's just not letting what is happening um just not letting what is happening here on the 15 minutes time frame take me away or confuse me from the overall thing that is happening here, right? So while you are trading, you need to always have in mind the level where buyers can be in full control and the level where sellers can be in full control. Any other level where both buyers and sellers have control is a no trade zone, and you should treat it as that. You shouldn't be afraid to miss out on the trade. I don't know, people are always scared to miss a trade, or sometimes they'll be like, hey, if I wait for price to get here, if it gets here, then maybe that means if I get in, I'm gonna have a bigger stop loss. I don't want to have that. I just want to have something small, something that I can just get in, and all that kind of talk, and it's unnecessary. Because if you get into a trade where buyers can play or buyers have good control, your stop loss don't necessarily have to be so big, and also you have more chance of your trade playing out. You have chance of risking a little bit more, unlike when you are in here and before the trade plays out, your stop loss has already been tapped like 2 times. So why not just take that whole risk and put it here at the zone where the trade is looks more likely, and just target a 1 to 3 or 1 to 2. So that's how I mark up my charts, and that's how I look for entries. This is what I consider while looking for entries. Now I'm gonna use gold to also mark this up again, so it doesn't look like I'm just using one pair. So you come here on gold again, and what is the bigger picture? If you go to the gold, what you see is that this level right here is your indication. Price above this level, let me zoom that in. Price above this level made an indication to the upside, showing you, hey, above this level I can go this high. And then price starts making a downtrend, right? Lower lows and lower highs and lower lows and lower highs. And then price comes here and starts to struggle, right? Now a lot of people got into the buy trade here. It's a good trade in terms of that. If you come to the 15 minutes time frame right now, it's a good trade in terms of the moment price breaks above here, then you are looking, okay, price is trying to get to at least this level, right? But most people are using putting that take profit around up here or something. I don't know why, but you need to understand that gold is still in the correction phase, and the only zone where this correction is gonna be invalid, or the only zone where the correction is going to be, you are going to say, okay, I think price is ready to start pushing up, is if this zone above here is broken. So as long as this zone remains valid, sales can play. As long as this zone here remains valid, sales can play. So on gold, I think price is still on the correction phase, simply because this is the indication. Price said above here, I can go this high. So this is a higher high, right? And then so far so good. Price hasn't taken out that high high, because in an uptrend, what what do you see in an uptrend? You see price make a high, make a higher low, right? Make a higher high, This is exactly how an uptrend works: higher lows and higher highs and higher lows and higher highs. So what we see here is a high, we have a higher low, but we don't have a higher high. So this is not, there's no sign that price is ready to keep pushing up. So with that being said, you only, where this buys on gold becomes so good or so valid is when price gets above here. Anything under these levels, sales can play, right? Now, some people are going to be asking, how do you trade the 15 minutes time? What about the ones that focus only on 15 minutes time frame? So let's go down to the 15 minutes time frame and break it down on that time frame as well. So if you go here on 15 minutes time frame, you see that price, like what I said before, price made that lower high. I'm gonna type this one out again. So price makes a lower high, makes another lower high here, right? So you have a lower high, you have a lower high, lower high, lower low, lower high, lower low, and then price fails to break these lows under these levels and starts building up that momentum, right? Now in this particular situation, what you have here is you have this point, you have this point, and you have this point. This is where you're trading on for this time frame, right? So, and price moves in zones. When price breaks the first zone, it's going for the next one. Like we said, on this is a zone. Price moves in zones. So when the price breaks one zone, it's going for the next one, right? When price breaks another one, it's going for the next one. The next zones are basically where buyers or sellers are at. So if price is buying, its zones are where sellers are at. So if price comes to this zone, if price comes to this zone and breaks it, what happens is it's going for the next zone. If it breaks it, it's going for the next zone. But if price comes to this one, breaks it, comes to this one and doesn't break, sellers pushes price down. And when price gets here, buyers are here. They try to push it up. So it's all a battle between buyers and sellers, fighting for who's going to push price to the next zone, right? With that being said, on 15 minutes time frame here, this zone is where the sellers are at, and this zone is where the buyers are at. So sellers push price down, buyers push price up. Price comes here, consolidates a little bit, and then finally, this also shows you that if you go to like the 5 minutes time frame, you're also going to see that in here there's buyers and sellers as well. So price puts a little bit here and then finally breaks out of this zone. Now that price has broken out of this zone, what does it tell you? That it's going to go to the next zone where the sellers are. And where is that zone? It is this zone, right? Now if price breaks this zone, it's gonna go for the next zone where the sellers are. Let me use so it's gonna go for the next zone where the sellers are, right? Now in this case, it didn't get to the zone, but you get my point. That if you're trading the small time frame, when price gets to a zone and breaks it, it's gonna go for the next zone. And when price gets to the next zone and breaks it, it's gonna try and get to the next zone. So that's literally how price moves. You just a fight between buyers and sellers, fighting for who's gonna take price to the next zone. Now with that being said, now price hits this zone and doesn't necessarily break above this zone. Sellers have taken back control of this zone. You can expect price to be pushing down to the next zone, which is this one. And that's why I think gold is still in the correction phase, because if you look at the 1 hour time frame, back again on the 1 hour time frame, you're gonna see that all this level All it is just a zone where it's just a no trade zone in the higher time frame. That's why the higher time frame is always important, because it gives you a more bigger picture. You're gonna see that this whole zone right here is has become a no trade zone, and just a zone where you want to wait for price to make a decision of where it wants to go. So this whole zone right here is a no trade zone. For me, I would say that you only like get into a trade when price is breaking under these levels, or above these levels. That's where a trade becomes valid in gold. So back to the main topic of how I mark up my chart and how I find entries. In marking up your chart, you want to first of all understand that the reason why you're marking up your chart is just to know what is happening in the market. It is not to find entry, it is to know what is happening in the market. That's what you need to have in mind while marking up your chart. I'm trying to understand what is going on. Now, when you understand what is going on, understanding what is going on means that you have identified the lower high, you have identified the swing highs, and you've identified the swing lows, and also you've identified the trend. So if it's in a bullish trend and you have a lower low and a lower high, then all you are waiting for is for price to start making swing highs, to break the swing lows and swing high, and like to break the lower lows and lower high, and start making higher highs and higher lows. That is the only time you start looking for entries. Or you're waiting for price to break the higher highs and higher lows and start making lower lows and lower highs. That is the only time you start to look for entries. You don't look for entries until this is done. So marking up your charts and entries are two different things, but they are very connected, because for you to get a good entry, you need to mark up your chart well. And for you to mark up your chart well, oh, that's not gonna work. That's not gonna work. But you get my point. You get my point. So marking up your chart, always have in mind that what you're trying to understand is exactly what is going on in the market. You're not trying to be perfect. You're not trying to be pinpoint. You're not trying to be accurate. All you are trying to do is you're trying to make it make sense to you what is actually happening in the market. And once it makes sense to you on what is happening in the market, then that is when you can then say, okay, I understand what is going on. I understand that, okay, buyers are in control above here, sellers are in control below here. Boom, boom, boom. So now what I'm gonna do is that I'm just gonna wait for price to come back above a level where the buyers or sellers are in control, so I can take a buy or a sell. That's it. So when price is back above that level, that is the only time where you now go start looking for entries. Basically entries is also just um you looking for that same pattern, that same higher highs and higher lows, but in the lower time frame. I'll talk about that in another video, but for now, I think that's all for now. I'm hoping I was able to explain this well. Please leave a comment if you don't understand, and yeah, see you on the next one.